What are the best stocks to invest in for 2023? So we all know and think that the S&P 500 and the tech stocks like in the NASDAQ are hugely overvalued. But which sector of the American stock market or the UK Australian stock market is actually way undervalued and could be a surprising, hugely asymmetric bet for profitable returns in 2023 and 2024, 2025? My answers are going to surprise you. So here we go. So for example, a question that I get quite often is, should I buy Facebook right now? Should I buy Google right now? Should I buy Microsoft right now? They're integrating with ChatGPT. They're going to be huge, right? Well, look at this. This is a tech stocks in relation to S&P 500 index, right? And we see it is really, really overvalued. It is at a high point. How high is it? It's basically the same height as, that's the 99-2000, the dot-com bubble. Right now, because of the Fed has pumped so much money into the economy, we don't even feel it. We don't even realize how overvalued these tech stocks still are, even though some of them have already fallen quite a bit. So if you want to buy something expensive, if you want to buy something that's hugely bloated, that has done quite well for the past decade, and may not do so well for the next decade, then sure, tech stocks might be the thing for you. But usually I try to play the contrarian and find value in something that is hugely undervalued and no one likes right now, something that's not so sexy right now. I'll show you what it is.
And look at this. Again, we will compare it to the S&P 500 in relationship. So this is gold, and look where gold is right now. It has basically been in this downtrend for all this time, right? It's getting cheaper and cheaper in relation to the S&P 500. That's been the last 12, 13 years.
Well, you might say, Pablo, gold's never going to come out of its bear market. It's done for, it's just in a bear market. Nothing's ever going to happen. Well, have you checked out the gold chart lately? Because gold is knocking on new all-time highs again, see? $2,000. Well, not just gold, but what about the gold mining stocks? What about the gold miners? What about silver? And what about the silver mining stocks? Well, see, a lot of young folks who watch my videos don't understand gold because they've only heard about it through Bitcoin indirectly, because they hear that Bitcoin is kind of like this digital gold. Well, why do they call it digital gold? Why does Bitcoin want this association with gold? That's because historically gold is the only currency or the only store of value that has pretty much lasted throughout history. Whether it's from the Incas or the Native Americans or Africans or the Chinese or the Phoenicians or the Egyptians, everybody used gold. If you just have to look at the Indian and Chinese market on gold today. Now, what makes the price of stocks or Bitcoin or gold or anything commodity go up? It's very simple. It's basically demand and supply. Now, here's a way of looking at what has changed about demand and supply when it comes to gold that almost no one is talking about. So on the demand side, we know that if you go to countries like China, India, there is an ingrained culture of people loving gold. It's in their history, it's in their culture, and probably in countries like Germany, in Europe as well, because they experienced hyperinflation in World War II. They know what gold can do when hyperinflation, when war comes again. And we do know that war is probably coming again. I'm not saying there's going to be like a massive World War III. It could well happen. But just think about it. What's happening in Ukraine and Russia right now, that's probably the prelude to World War III. If we just have another Cold War and there's no more bullets actually being fired, which I would be highly surprised if that did happen, then there will be enough geopolitical tension to make countries, entire nations like Russia, China, Iran, and even Japan, Saudi Arabia, to want to hold and hoard gold. Don't believe me? I'll show you. So we see here, back in the 1970s, basically, the world had those wars in the Middle East, and there was a huge shock to oil prices. That's why we had bad stagflation. And back then, all the central banks were so worried that the central banks held 74% of their foreign reserves in gold. And then as the world became more peaceful and there were less wars, less geopolitical tension, so they said, what do we need gold for? And they sold and sold and sold down to about 10, 11%. But we've made a base, and as we all know, geopolitical tensions are rising around the world, so central banks are accumulating gold again, right? We do know that China, Russia, a lot of these countries are buying a lot of gold because they're afraid that their foreign reserves, which are parked in US dollars in the US Treasury, might get taken again, as in the case of what happened with Afghanistan and Russia as soon as the Ukraine war started. So here you see gold selling, the red area is gold selling by central banks, and suddenly in the last 3 or 4 years, they've been buying and buying and buying. Central banks, the biggest whales of them all, are buying gold. Think about that. That's the demand story. What nobody will tell you is that right now, basically, countries like Russia and China and India, Brazil, the BRICS nations are trying to get away or decouple from the US dollar. So the US dollar as an international reserve currency is probably gradually and slowly might be losing its status. And they're trying to use the Chinese yuan to trade in petrol. So rather than the petrodollar system, it's the petrol yuan system. And the petrol yuan is going to be backed by gold. That's the important. So that's the demand side. Lots of big whales, lots of central banks now want to have gold. Now, what about the supply side? So here we see that the gold reserves by the top 10 miners, gold miners, are going down by 33% over the last decade or so. Now, see the white line? That's the amount of cash flow in these gold miners. See, these gold small mining stocks, their cash flow are actually at an all-time high. Yet the amount of, see the green and red, the amount of acquisition and mergers and acquisitions are actually quite low, which means there's no excitement. People are not excited about this industry or sector, which is great time. See, one major worry I've always had about gold and silver miners, especially the small ones like GD, as represented by GDXJ, is that the problem is they don't have enough cash, they need to borrow too much money, they're a risky small business. But however, their cash levels over the last 20 years have just risen, and now it's at an all-time high. They're actually kind of healthier than before. And with all that new cash flow coming in, because gold prices are hitting a new all-time high, do you know what they do with it? Do they use it as CapEx, or capital expenditure, which means to buy new equipment, seek out, explore for new gold, buy new drills, update their equipment, their machinery? No, they're not. It's actually at a new all-time low. Do you know what that means? That means they're not ready. They're not ready for this at all. Even the gold miners themselves are not spending on new equipment and new machinery. Even they can't see the future of gold right now. That's how pessimistic it is. And if this sudden demand from China, from Russia, from BRICS nations hits, they're not going to be ready. They can't even supply enough gold themselves. Here's another chart showing the gold line is, of course, gold price is hitting nearly an all-time high at $2,000 per ounce. And yet the capital expenditure, these blue lines, right, they're still only 50% as high as the previous all-time high. So the gold miners not spending, right? What that means is when the prices push up higher and they're like, okay, so there's so much demand for gold now, they won't be able to produce enough to meet the demand because they're not ready for this. They're not spending the money to get their equipment and the machinery ready. So imagine when you have lots of demand and not enough supply in the next year or 2 or 3 for gold and silver. If these gold miners, if they're not spending money on their equipment, then what are they spending money on? Well, they're spending money on share buybacks. It's like when you burn tokens, you do a crypto token burn. They're reducing the number of shares outstanding or floating out there. And that's not a bad thing either, but it means their supply of gold reserves and their capability to mine gold is now lower than other times in history. So on top of the gold and silver itself, maybe the gold mining ETFs such as GDX, GDXJ, SLVP, maybe they could do well as well. Follow me.